Welcome to Millennials Meet Liberty, your source for searing hot libertarian takes on the world's weekly headlines. Here's your host, Colt Thompson.
Good afternoon, everybody, and welcome to episode number 18 of Millennials Meet Liberty podcast with yours truly, Colt Thompson. So here we are rolling even keel 2 episodes per week on Monday and on Friday, so you can surely count on that. Thank you very much to those of you who have tuned in thus far and who are continuing to be awesome, contributing, supporting listeners of the show. It's really, really exciting to see that people are genuinely interested in what is produced on this program week in and week out, and I could not be more thankful for your guys' support. So going forward, we're really going to keep pushing this on social media, on YouTube, Facebook, Instagram, Twitter. You can follow me at Colt Thompson 10, and you can also follow me at MML pod on all of the various forums I just mentioned. So if you're interested in seeing the content I share and interested in further items related to the podcast, by all means, give me a click and a follow. I'd really, really appreciate it. Also, I guess I'll just kind of dovetail for a second and say if there's any people out there who are in the liberty movement or conservatarian types and have their own show, have a podcast, have a YouTube channel, by all means, I'd love to jump in there and maybe have a discussion with you on anything under the sun, really. And I'm more than happy to host you on my show as well. While this is a monologue format, I'm also happy to mix it up with other people and just discuss what's going on in the world. So I think it's important that liberty lovers always extend olive branches to each other and, really have each other's back and help us get things right out there, because it's a cold world and you're living under state control. And I really want to make sure people are on the same side and continuing to get the education and become more intellectually fulfilled in their worldview, so on and so forth. So I'm done going on a tangent there. I really wanted to devote today's episode to the Federal Reserve. I wanted to go over my view of what the Federal Reserve is doing to our economy, what it has done to our economy, and why we could just basically do without it completely and be a lot better off. So I'm going to go every which way with this. I'm going to try to keep it under a half hour. But here we go. So the Federal Reserve really has 2 mandates, which they go by and what they're responsible for overseeing in terms of economic health, that is, here in the United States. So the 2 main responsibilities or mandates are as follows. They are maintaining maximum employment and then maintaining stable prices and moderate long-term interest rates. So right there, you can quickly see that the Federal Reserve is tasked at basically running the economy. That's really what they're up to. They want to make sure that the economy is harmonious and moving ahead and having GDP outputs that are high and having inflation that's low and having unemployment that's low. That's really what they're driving at. That's what the Federal Reserve sets out to do on any, given day. So in the United States, people look around and they've seen financial crises. They've seen the Great Depression in the 20s and 30s. They've seen the financial crisis most recently, which was the Great Recession in 2008 and beyond. They've seen the dot-com bubble that was right around 2000, but there's always been these little micro recessions or downturns paring back in the economy ever since the founding of the country, and then moreover after the initiation of the Federal Reserve. So no matter which way you slice it, historians can all agree that the Federal Reserve came about and there are still recessions and downturns in the economy. So the Federal Reserve, if they are mandated to keep employment at bay and keep inflation at bay, they really have not achieved what they've set out to do. So the whole establishment of the Federal Reserve has been a complete unmitigated disaster. And I'm going to talk about this a little bit further. So the Federal Reserve essentially is there to assist with Congress and carrying out Congress's agenda, the legislative agenda therein. That's really what they've been doing. It's not necessarily this game of cat and mouse where the Federal Reserve is keeping in check the expenditures and keeping in check the size of government and really the issues that government cause the private sector and the economy therein. They've really enabled Congress and the legislators to do what they really want to do and ultimately cause these boom and busts and cause a lot of malinvestment in the economy. As the late, great Ludwig von Mises said, malinvestment is his term. So I'm going to flesh all of this out. The Federal Reserve was essentially established as a private entity. The government at the time created the Federal Reserve really as another source of lending to finance wars. But what they wanted to do is, it's really the proverbial camel's nose under the tent. That's the best analogy I possibly can come up with. And I know I've used that before, but the idea was it was going to be there as this entity that was going to regulate the economy, and it was also going to have a slush fund of sorts to dip into during wartime. But and really, a lot of these measures were supposed to be temporary. I don't think the Federal Reserve was supposed to exist into perpetuity, but here we are. That's like any law or regulation the United States puts on the books. But when the Federal Reserve came about, they were, a private entity for which they are truly not right now. They're pseudo-government, but in my eyes, they're really a government entity. So the idea was the lawmakers back then said, we're going to keep this private because if we keep it private from government, there's no coercion and they can stick to doing their job, which is keeping the economy smooth while the lawmakers iron out what they need to do with the given issues of whatever setting and time period was there. I guess in time, the Fed was supposed to be this stable force that would really keep the economy humming while the politicians fought stuff out on behalf of the greater good, in air quotes. So what we've seen since this Federal Reserve has been established is a lot of boom and bust cycles, and this cyclical action I said happened pre the Federal Reserve, but it seems as if the recessions and depressions following the creation of the Federal Reserve, and I know there's only been really one Great Depression, but these downturns in the economy following the establishment of the Federal Reserve, they have been elongated due to the Federal Reserve. They have not minimized the length of the recessions or downturns in the economy. They've really created a sluggish drag on the economy. So the Federal Reserve has done everything it can to work arm in arm with the Treasury to alleviate the United States of the burden that is the gold standard, which really isn't a burden at all. It was exerting fiscal discipline on the markets in a sense that government could not just do whatever they wanted in terms of printing money. But now that we've done away with their bimetallism and do not have the gold standard and currency is truly by fiat, the Federal Reserve has been able to print out as many dollars as they possibly, wish to or think is right for the economy. So all the Federal Reserve really is doing at this point is creating boom and bust cycles and is creating an environment of inflation. So if you think about inflation, a lot of economists mix up what inflation is because all it truly is an increase in the money supply. So when you increase the money supply, your purchasing power of your dollar is diminished. And when your purchasing power of your dollar is diminished, you can buy less goods and services. So the Federal Reserve basically exists to print money to in turn create inflation, which in turn makes the average consumer poorer, especially the ones who are not getting raises year over year, because inflation can increase at 2, 3, 4, 5. Who knows what percent ultimately year in and year out. So when you tally that up over the long run, over 10 years at 2%, that's 20% inflation over a decade. And then, of course, if your employers are not giving you a cost of living adjustment, that really that hurts. But most employers do give you a cost of living adjustment. But, the inflation seeps into all the products, goods, and services all over the economy. They seep into bubbles in real estate. They seep into bubbles in the stock market. They seep into food products. They seep into gasoline and energy products. So while you might be getting paid more money with a cost of living increase as an employee of a company, you're really still just trying to keep up with the inflation that's popping up all over the economy. So where it's good is for real estate moguls like Donald Trump, because the inflation is essentially making you wealthier on paper or in the abstract. Because if you take out a mortgage for, let's say, $100 million, and inflation is pushing the price of your property up in value to $200 million, well, then all of a sudden you only have a mortgage on half of your property. And if you go to sell that property, you can make back the full amount. So that's a drastic example, but this is going on all over the place. This is why real estate moguls and developers love inflation. They're inflation-type people. And that's why Donald Trump, who's in charge of the country, doesn't seem to mind the Federal Reserve playing games with printing money and causing inflation, because he himself had taken advantage of that throughout the duration of his career as the wheeling and dealing businessman in New York City. So the Federal Reserve has gotten itself into quite a few pickles. And I want to kind of illustrate what's going on right now and what it's going to look like in the future for us here in the United States, because this is going to have an epic impact globally. The quakes are going to be felt when we have this next recession and downturn in the economy, which could be pretty nasty and ugly. I'm not a fortune teller, I'm not a financial advisor, but I feel like I have a pretty good grip on how this is going to play out. So just a little bit of back history here over the past 20 years. The dot-com bubble was a speculative mania that occurred and ended abruptly around 2000, right at the turn of the century or millennium, that is. And when that happened, the Federal Reserve jumped in and they said, we are going to bring interest rates down to 1%. This will spur investment in the communities. It'll allow businesses to be free up, to be have a little more liquid cash in their hands and to move onward and upward and really spend their way out of this recession. And it worked in the short term. And then fast forward, not 10 years later, not even, we were hit with the worst recession in United States history following that of the Great Depression. What ended up happening was everybody knows the whole story with the mortgage-backed securities and all of those things. And people think those instruments were something that greedy capitalists came up with. And it really wasn't the case. I mean, Fannie Mae and Freddie Mac encouraged these banking institutions to push these loans out into consumers, basically saying if their credit worthiness isn't that great, who cares? Let's get them into a house anyway, even if they don't have stability of employment or a good income or the credit worthiness that they would have pre the United States wanting to get everybody into a house, which that was the American dream, right? I mean, George Bush foisted that upon the public by saying, we're going to give you Fannie Mae and Freddie Mac, and by all means, everything will be federally backed in terms of loans. And then these adjustable mortgage rates popped up, and this whole terrible mess really came to be by virtue of the Federal Reserve and federal government. And then when the downturn happened, and I can talk more about 2008 for an entire podcast, but I want to skip through this pretty quick. So when that downturn occurred, the United States said, well, we brought interest rates down to 1% around the dot-com bubble. Why don't we bring interest rates down to 0% now and really kind of build everything up and really inject all this cash and stimulus into the economy that we need? And at the same time, the federal government and the presidency, everyone was pushing for these giant stimulus packages and bailout packages, which came down the pike. So instead of allowing the free market to fix the ills of the economy and the woes of individuals across the nation and the world, through the free market forces, that is rectifying the situations and flushing bad money out of the system and putting good money where it needs to go, hence the opposite of malinvestment, the further stimulus propped everything up once again. And now we are towards the tailwinds of what just occurred. We're towards the end of this calamity in 2008. And what I mean by that is the economy is growing in air quotes, and Donald Trump likes to pretend like it's booming in air quotes, but it's not. The GDP has not really taken off and lifted and surpassed that of Barack Obama much at all, if at all. GDP hangs in there between 2 and 3% year over year now that Donald Trump's been in office for 3 full years. So we see this sluggish growth. And then in addition to that, the Federal Reserve was supposed to do away with their quantitative easing program and turn this into quantitative tightening and really be servicing the debt and not printing as much money and keeping interest rates higher and bringing them up progressively higher to encourage the American consumer and corporations to save money. And then in turn, saving money would be good for the long-term health of the nation, because saving money, people could use that money and businesses could use that money to form businesses, get into some capital investment, and then turn around and hire people, and everything would be good and the economy would grow even faster at a long-term clip. Well, instead, the Federal Reserve aborted this policy of raising interest rates in the back half of 2018. So let's time shift for a second. 10 years after the Great Recession, and mind you, recessions a lot of times just happen naturally, in air quotes, because of the Federal Reserve every 10 years or so, but they're becoming more and more and more painful. So after the 2008 crisis in 2018, the Federal Reserve set out to unwind their balance sheet. And when they're going to unwind their balance sheet, they were going to, again, take care of some of the debt, and they were going to offset some of that debt, and they were going to raise interest rates. They were going to put interest rates on autopilot. And the idea was to, like I said, create all of the savings and create more of a real economy. Because the first year in office for Donald Trump was 2017, and the stock market, for the first time literally ever, rose every single month in a calendar year. It literally was victorious every single month. And when 2018 came around, I think the Federal Reserve basically was like, look, I think we can endure what might be a hardship here of raising interest rates because the economy is just taking off so crazily under Donald Trump. This is what they thought. And in 2018, when they set out to raise these interest rates, I thought to myself that I don't know if they're going to be able to pull this off. And there's a lot of libertarian type thinkers who thought the same thing. And then what ended up happening was towards the end of 2018, October, November, December, following a rate cut, maybe two, or a rate hike, that is, maybe two, all of a sudden the stock market was jittery as all get out. It started getting obliterated. There was carnage all over the place. Everything was red, especially in December. And everyone was like, oh my God, here they are during the holiday season and the stock market's getting eviscerated and people's portfolios are taking a hit. And this is something that looked like it was going to get worse before it got better. So then immediately the Federal Reserve pivoted from its so-called agenda and autopilot program. And then going into 2019, the current year we're in and we're wrapping up, they threw a lifeline. They said, look, we're going to spike the punch bowl a little bit more and we're going to drop interest rates however many times that takes, however many times is necessary. And instead of getting the predicted by most of the mainstream media hikes in interest rates over 2019, we had 3 cuts. And here we are in December, just coming off this last Federal Reserve minutes and meeting. And Jerome Powell, the chair of the Federal Reserve, said, look, we are not going to cut anymore and we're going to stay put. We're going to just kind of hold tight here. And the markets didn't really appreciate that this past week. But going forward, it'll be interesting to see what happens as inflation starts to take off and servicing our debt becomes increasingly difficult as a nation. We'll see if Powell and the Fed decide to give some more interest rate stimulus to the economy because they might be forced to. And meanwhile, as this is going on, Donald Trump is screaming bloody murder that he wants interest rate cuts. He loves the negative interest rates overseas in Europe, and that this would be so stimulative and it would only help out the best economy that the world has ever seen, because that's what Donald Trump calls our economy, the best economy the world and nation has ever seen, which couldn't be further from the truth. Like I said, it's more similar to that of Barack Obama's economy. So he's screaming for these things, and it's awkward because, as Peter Schiff says, leading up to the presidency, or I guess the election that was when Donald Trump, before he assumed office, he called out the economy for the fake unemployment numbers and for the lax policy by the Federal Reserve to balloon our deficits and to inflate our economy and cause bubbles and all of these things. And now he turns around as the ultimate hypocrite and he wants all these interest rate cuts and he wants the Federal Reserve to take massive action to keep unemployment at an all-time low and keep the workforce labor participation rate from slipping even more. And he just wants to see all of this phony growth because to him, the phony growth is now real growth, and the real growth he can use as something to sell to the public to get him in office for a second term. So the Federal Reserve has pretended like it was independent of the federal government, but it is not. When Donald Trump was barking, Jerome Powell bent at the knee. And when he bent at the knee, he slashed rates 3 times in 2019. And I think we're going to see more coming in 2020. That's just the way of the world. The real issue, though, what we're teeing ourselves up for is that this debt burden and this inflationary fire that's being fueled and that these interest rates going down, eventually they're going to bottom out around zero. And do we go negative? I mean, what's the next best play? Because there's a reason that there's international flooding to our treasury bonds and to our stock market. It's because some of these wealthier countries in Europe have gone negative with their interest rates, are in a precarious situation, and it's more attractive to take out a treasury bond or get into the U.S. stock market if you're abroad. The problem is all these issues that have reached Europe so far are going to reach the United States in a much, much, much bigger way. So the idea is, an intelligent investor, you probably want to keep your money, and again, I'm not speaking as an advisor, you want to keep your money out of the United States dollar, out of United States stocks. You want to place them in things like commodities and booming emerging markets and foreign currencies. I mean, you want to do everything you possibly can to mitigate yourself from this impending disaster because it surely will come. I mean, Jeff Gundlach, Peter Schiff, Robert Murphy. I mean, there's all these people out there in the libertarian type community who sniff all of this out, much like Ron Paul, who predicted the financial crisis of 2008. That same Ron Paul who predicted the blowback that caused 9/11. That same Ron Paul has been right over and over and over again, who people don't view as that popular anymore because he's old and he's out of politics, but he still has a lot of wisdom in those bones. So the Federal Reserve, really, we could just do without. I mean, we need market forces to establish what interest rates are across the country. We don't need central bankers propping up the wealth of really real estate investors, really wealthy ones across the country at the expense of poor people. We don't need inflation at all. What we need is rapid deflation. All inflation is just printing and drumming up of the money supply. I mean, if you think that your dollar being less valuable and you being able to buy less with that same dollar you own, if you think that's a good thing, then you like inflation. And of course, that doesn't make any sense. That's nonsensical. What we want is deflation. In a real healthy, true economy, you see prices being driven down. And when those prices are driven down, your dollar buys more. And we don't need another dollar printed at all. I think the money in circulation right now will do just fine. This is all about scarcity. The more scarce the dollars, the more valuable there are. It allows you to save properly, whereas inflation now is wiping out the average consumer's savings, even their 401ks, all of these things. It's impossible to save for the short term or long term. You need to get your money into a stream of investments that produce that flow of residual income that can keep you afloat in the long term. It ain't going to work with just stockpiling your money because of the Federal Reserve. So I can go on and on and on and on about this, and I just really feel bad for the American consumer, anyone here in the homeland who wants to buy a home or start a business, because everything can change in the blink of an eye. I mean, prepare to have your retirements halved in the next few years, maybe even worse. Of course, they'll make a comeback over the long, long run, but I mean, these people approaching retirement, and how does that do them any good if they're towards the end of their life and they need their cash? They want to be flush. They want to draw their money where they can take care of themselves. And the Federal Reserve is really causing this rickety, dangerous effect that is going to harm the entire country. So really, the United States government needs to slash much spending, slash the size of government, really get lean and mean, tighten their belts. And then the Federal Reserve needs to raise interest rates exponentially higher. Obviously, they need to go up. I don't know at which rate they need to be up, but the going up of interest rates will allow for savings and investment and a real productive, true economy built on rock and steel, as opposed to being built on sand and mush, like this current phony bubble economy we have right now. And a lot of people, I'll talk here for a minute, like to, a lot of people in the libertarian community and people in the conservative community, or anyone who's just interested in technology or fintech or cryptocurrency, they like to say, well, the idea is we're going to get away from this whole Federal Reserve and banking system by using cryptocurrency. And I hate to break it to them, it's just not happening. There's no chance in hell. I mean, while this technology is incredible, the blockchain will prove big dividends in other industries outside of finance. It's just not going to help because the government and regulators are going to key in on you and they're going to find a way to quash and stop it. They don't want a competition in currency. It just ain't going to work. So Bitcoin is nothing more than a speculative asset. It's not a real type of money because it could turn to zero tomorrow. There's just no stability in the currency. So while it's a great idea, and I hopefully it can, it's lended to more credence down the road and people really buy into it. And maybe if it was backed by something like gold or a precious metal, if it was backed by something of value and it really made more sense, that'd be great. But right now, Bitcoin's backed by nothing, and hence why it's intrinsically worth nothing. And it's not a very good idea to get into all of that when it could drop by 50% in a day like it does all of the time. There's a lot of pump and dump and the big whales getting in there, moving the markets, causing a rush of energy upwards in the market cap and a lot of small people jumping in, buying it, and then the big people sell out and they turn around and the poor people are left holding the bag. I mean, there's a ton of market manipulation because the market's small enough for billionaires to throw their weight around and make money off suckers, and that's what's going on. A lot of sucker rallies in Bitcoin. So you're not probably doing well. And again, I'm not a financial advisor, I'm not giving advice, but me personally, I got all my money tied up in foreign stocks and foreign currencies and economies that have a low debt to GDP ratio, have proper interest rates, proper, relatively speaking, who have a flourishing economy, who are respecting capitalism and the entrepreneur. That's just simply not the United States. I mean, the Federal Reserve has created this society where we have service sector jobs, where manufacturing jobs are going overseas, which are the true productive jobs. They've allowed for the United States to issue all these federal student loans. They've caused the average consumer to go into credit card debt and to take on too much debt in general. They've caused the nation to take out credit on things like cars and other items that they used to not do in the past. I mean, really in the United States, it'd be ideal if people could buy everything in cash, but they can't anymore. It's because of the Federal Reserve and inflation. So by no means necessary should anybody decide to buy anything not in cash outside of probably a house. I mean, you probably need to take out a mortgage, but if the bigger down payment you can get, the better. And you can alleviate yourself from some of the financial hardships that the Federal Reserve has spun across society. I mean, we're all debt slaves. And then when the chickens come home to roots and all this comes down like a house of cards, which it may in the next 6 months or a couple of years, I hope to God that the United States learns the lessons from the past and allows companies to fail and allows the big banks to go under and allowed people in the federal government to be jailed and allow a lot of these negative things to happen to some people just happen because we need a real allocation and reorientation of resources and money in the United States. It needs to go into the hands of the people who are wise, prudent, productive, and that's not the government. And the Federal Reserve needs to butt right out and Congress needs to butt right out. We need the intelligent entrepreneurs of society leading the way, the productive private citizens of the United States. not the Federal Reserve and not Congress, printing gobs of money and spending it on terrible programs. It's kind of a joke, but the Federal Reserve encourages the United States government to dig holes and to fill them back up. That's what they're doing. There's so much unproductivity, malaise, and stupid things going on in government, and the Federal Reserve allows all of that. Not to mention the biggest one of them all, which is the warfare state. The Federal Reserve prints all of this money because I just want to take a TV timeout for a second. There's really only a few ways the United States can even get money into the hands of the military-industrial complex or anything for that matter. It's to print, it's to borrow, or it's to, geez, it's slipping my mind right now, print, borrow, or tax. I apologize. So those are really the three ways the United States government can come up with any funds at all. And when you tax a citizenry too much, they're eventually going to tell you to fuck off, or you're never just going to get a government. They're never just going to get all of the money that they set out to get through taxation. People will just throw in the towel or stop working or just evade taxes. You're always going to get this situation where the base might be widening and the tax rate may go down, or the base might get smaller and the tax rate goes up. You're always playing this game. So the taxing just isn't going to work. And then as it pertains to borrowing, the U.S. has relied heavily on that. But now we have some of our quote unquote enemies in trade and in military affairs having some of our debt and vice versa, and we're indebted to them, and it doesn't make any sense. So you want to stay away from that a little bit as a government. I mean, the United States is not that stupid. And then finally, the last thing they can do is just fire up the printing press, the federal printing press. And that's what they've relied on heavily over time. And it's increasingly more so. I mean, we're $23 trillion in debt and counting. And liberals like to pretend that debt doesn't matter and money printing doesn't matter. Well, of course it does. I mean, the purchasing power thing is humongous. You're taking a pay cut every single year. You don't get a raise that's equivalent to that of inflation. I mean, it's very difficult. And then in addition to that, if the Federal Reserve's goal was truly to maintain full employment, they would be telling the government and telling Congress, look, you guys have the power to do this, but if you want to see people not unemployed, then you basically need to eliminate the minimum wage. Just get rid of it. That would cure one of their two mainstay, I guess, policies or things they're tasked to do, one of which is unemployment and the other pertaining more to inflation. So, and I guess inflation, what I mean by that is maintaining stable prices and the moderate long-term interest rates as fleshed out in their bio there on the internet. So that's really mostly what I got for this podcast as it pertains to the Federal Reserve. I hope that was a good encapsulation for you guys. I mean, Ron Paul put his hat on ending the Federal Reserve. That was one of his slogans, end the Fed. And I personally really agree with that. I mean, the warfare state, the welfare state, the two big evils of the United States, generally speaking, were brought on by the Federal Reserve. They are really the bane of everyone's existence here, whether people know it or not. And then the Federal Reserve also appoints people to these chairships in Chicago, Atlanta, the New York Fed, all these 12 or 13, branches off the Federal Reserve based out of DC that they appoint all these stooges from Harvard or Yale or left-leaning economists to really just join in on this following charade and continue the encouragement of spending more money, printing more money, really cheering on, being the biggest cheerleader for inflation. I mean, it's just really bizarre. We live in this parallel universe where normal businesses and people, they save and they understand that saving helps them in the long run. And the Federal Reserve decides we're just going to spend, and we're going to spend our way out of these economic catastrophes that we keep causing. The United States is famous for that. I mean, the Federal Reserve causes a lot of these issues, and then the U.S. in turn works with them. So the government and the Fed just cause all of these issues, many, many big issues. And then they turn around, they attempt to fix these issues, and they sell the public on fixing them, and they never, ever, ever do. Hence the dot-com bubble with the 1% interest rates, give or take. Hence the recession with the 0% interest rates in 2008. And now what are we going to do? When our backs are up against the wall and this economy catches up to us and this phony bubble pops, who's going to be left holding the bag? Probably poor people. I'm sure a lot of bailouts will be coming. And I hope to God that capitalism is not blamed for this, for which it will be. Because it's easy to point the finger at the free market and the greed of millionaires and billionaires. Because we live in this society where everything is accepted. The Federal Reserve and the federal government are tasked to keeping everything in check in terms of the big banks. But it's the opposite. They line the pockets of the big banks. And it's really a shame. So if you do a true root cause analysis of crony capitalism and why it happens and why the Federal Reserve and federal government get so much along with these big bankers and these big automakers and these big, huge executives at these tops of these corporations, it's because nothing more than the federal government is looking out for themselves and it's self-preservation. Same with the Federal Reserve. So when you do root cause analysis, it's not the people who are trying to manipulate governments and get the special privileges. It's the people in government. They could simply just say no. They could say no one's getting a privilege, no one's getting a corporate subsidy, no one is being allowed to have liquid cash at a low interest rate because the Federal Reserve's offering these things. They can say no. The founding fathers would have said no. But instead we have governments and we have the Federal Reserve run amok, and it's a shit show and it's terrible, and I think everyone should condemn them for it and really laugh at their stupidity. But no one's going to be laughing when the economy continues to go downhill in the next few years, for which it will. And more people are unemployed and more people are not starving, but having a hard time making ends meet, because it's not going to be the apocalypse, but it's going to be very, very bad, and other nations are going to surpass us. And we need to really look internally and ask ourselves, what can we do to be more competitive? And that's do away with the Fed. It's to raise interest rates. Hopefully, the market will take care of that if there wasn't a Federal Reserve, but we will always have one. So it's hoping that the Federal Reserve raises interest rates. It's that the free market can correct some of these issues. It's that we downsize government and scale it back completely. It's that we just allow the free market to come in like it did in centuries past in the United States and be this tsunami of productivity and make us the envy of the world. So I'm closing in a half hour. I wanted to keep it at that. So thank you very, very much for listening to this. My opinion there on the Federal Reserve and what everything will look like. And I'll see you guys Monday with episode number 19. Thank you.